Hi guys, welcome to the Savvy Money Show. Me, your host Sean. Now, today we're going to be talking a few things. We're going to be talking about the Fed and what its document means. We're going to be talking about a new gold miner that no one is talking about, and the best vaccine play. Now, let's head to it. And don't forget to hit that lovely like button, almost as lovely as me. Helps with the YouTube algorithm and getting the video out to more people. And don't forget to hit that subscribe button if you haven't already. Become part of the Savvy Money Show family. We give each other hints and tips and updates about stocks and shares we talk about on the show. As well as that, you can ask me to look into any share you want, and I don't charge a Discord fee or ask for a Patreon. All I do ask is for you to comment in the box below and hit the like button. Even if you disagree with me, especially if you disagree with me, I like a debate. And if I do something wrong, I want you to call me on it so I can improve the channel. And why not check out the links in the description below? There's lots of offers. I've used each one of them myself. I wouldn't give you links if I haven't checked them out myself. If you're looking for a free trading platform which should trade your stocks and shares, you know, you can get a free share worth up to £200 for signing up and depositing a small amount. A free trade only requires a £1 deposit. The others require £100 or dollars, depending on which one you go for. Stake has over 3,500 US stocks on their books, which is the biggest one outside of the US. Whereas Trading 212 is one of the best and easiest platforms to use. But as I said, I use all three. Anyway, on with the show. Now, before we actually get into it, I want to say, I know it's a red day, but don't go panicking selling all your stocks. This is why we've done our preparation. This is why I haven't only been on the bandwagon touting tech stocks. This is why we also have recovery stocks in there as well. This is why I do a variety of stocks like our barbell stocks. So we have our COVID stocks and our recovery stocks. Now, another reason is, if you caught my video before on how to deal with a crash, I suggested you put that as soon as you do your research on a stock, you have a book or a notepad with you, and you write down in that notepad while you're doing your research everything you like about the company, and then you put down the possible pitfalls for that company or things that could go wrong, pros and cons. You know, just pick up a cheap notepad. Doesn't have to be an expensive leather bound one. It could be a Poundland one, you know, a dollar store one. You just get a cheap one, and then you put your entry point and exit point down. If it isn't at your entry point, then you get put a price alert. Once your price alert comes, you check it again, see if any of the fundamentals have changed. If it hasn't, then you know to go into it. You The other reason is for days like this. If you have gone into this stock and it's a red day, you check if anything has changed, if it's still facing those pitfalls, if any of those pitfalls have actually been activated, or if any new pitfalls have come across. Are the fundamentals the same? The reasons the same gone into them? Then you will see the reason you love this company, the reason you like this company in the beginning, and the reason why you don't want to sell. An example would be, I went into a company, I mentioned it on the video, it went up about $1 and it was a good company, but no one else seemed interested in it. It just seemed to go sideways for months, and then I thought to myself, I better sell this. There's no action on this. Several other companies going up. I looked in my book and I saw had no debt or next to no debt. It was getting good income. It was doing well. And then I saw that it had sorry. Then I saw that it had good prospects and it was doing well. And the reason why I went in it the first time, and then all of a sudden investors started going into it. People, even Warren Buffett went into it. And I've done the same with AMD. I was in AMD when everyone was going into Intel and Nvidia at $40 a share. It even dipped down, and for months it was at $40 a share, and it was ages before it started moving. But I looked in the book and saw why I went in there originally. And funnily enough, I looked at the competitors section, and when Intel fell, I looked at the competitors section and my breakdown of the competitors, and I saw Intel, hold on, they have Mobileye, which is used for autonomous driving, and people are not looking, they're only looking at this 7mm chip thing, which is going to hurt them, but this is one aspect. They're not looking at the autonomous driving aspect and all their other sectors. So I picked up Intel cheap. Now people are starting to look at Intel again. So I suggested you get a notepad, you write down everything you like about the company and your pros and cons of the company. And then on a day like today, when it's red day, it will prevent you from selling. Also, if you did a barbell portfolio where you have some tech stocks, some recovery stocks, or growth stocks, and like, you know, then you will, or what they call boring stocks as well as the growth stocks, and then you will be insulating yourself against this kind of crash. Anyway, on with the video. Now, basically, the Fed has said it's not going to go by any particular algorithm. You know, it could be 3 months, 6 months, 9 months, 12 months, but from what it said, it suggests like 12 months forward looking over inflation and interest rates. It's looking forward to 12 months. and doesn't mind interest rates rising a little bit, but its job is to keep inflation down and interest rates down, and avoid deflation at all costs. So if inflation has to rise in order to stop deflation, then that's the Fed's main job. So they will allow inflation. However, they will do everything in their power to stop inflation over a certain amount, basically 2% a year or 1% over 3 years. But what they're saying is, if it goes over the 2%, then that would be acceptable within reason. What they are also saying in the report is, however, there would be a, how do I put it, we should be careful because of a downward trend, and some of the words they use could be a bit frightening, because I won't use their words because it could force people to sell off their stocks, and they basically trying to say that, so basically the report says that we will have up to 5 years. People who are banging on that we'll have a crash soon, they're not quite correct. I've been saying this for a long while. Even if there is a crash, we, as we've seen this time, come out of a crash better off than if we sold our stocks and tried to time the market. I was lucky, I got in at the bottom at the time, and believe me, it was luck. Anyone who says I timed it exactly, no one can. I was lucky that I did time it exactly. It wasn't by plan. I thought I was getting it in, catching a falling knife, and it was going to drop another 10%. Everyone else did. Now, I knew that I'd rather get in then and have more money for when it fell another 10% to put into the market, knowing that it would rise even more. The thing is, what they're saying is that the Fed is predicting is that there will be 5 years of growth, and then we're going to have some pain, or the US is going to have some pain. There's going to be a drop. This is my interpretation of it anyway. They also say because of all the borrowing during the zero interest rate market, once inflation goes up and interest rates start to change. Because remember, interest rates not that long ago were 2.25, now they're 0.25, and they were, and loads of companies have started borrowing back of that. So once they go up again, in order to stop inflation getting out of control, you know, just bring it up to what it was before, 2.25. If they have to, they don't want to, but if they have to, a lot of these companies are going to be panicking, and it won't be the CEOs who made these decisions that do it. It will be the minimum wage staff, and they actually named like Hispanic, blacks, and the poor, and minimum wage people. The reason he named those races and those class of people is because they are more likely to be in the poor classes and live in poor areas. It's not a more racial, oh, he's racist because he says that. It's because of, and it's not really a racial thing. It should have just come out and said poor, working class, and minimum wage. Because to tell the truth, it doesn't matter what race you are. If you are minimum wage, if you're poor, living on the breadline, then you're going to be hit. And the one thing to do is to invest. Make sure you've got an emergency fund. Invest. I've heard people say invest in real estate. Real estate is going up. It's becoming a bubble in itself. I've heard people say invest in stocks. Yes, invest in stocks. But if you don't know how to invest in stocks or where to invest in stocks, then invest in ETFs. But you've got to find the right ETFs, and I'll be speaking about that later. Now, you have people saying invest in gold, silver and things like that, because if there is a downturn, but wouldn't, again, investing in physical gold or silver can end up costing you money. What I like to do is invest in the mines when they're undervalued, and they pay a good dividend. And I've done videos on that in the past if you want to check that out. Now, Jeremy from Financial Education did a good video about whether or not we're in a bubble, and he said himself how S&P 400, S&P 600, they're very high. You know, the Dow, but S&P 500 and the Dow, you know, they're the ones that are really up, bubblish. When you look at the Giardini report, mainly because there's stocks in there that make it look like they're going to pop. You've got all these overvalued tech stocks, and that's why you see with CrowdStrike, smashed earnings. Why did it go down? Because even though it smashed earnings, everything looked great, because its profit, its earnings weren't as good as this time last year. Now come on, it's got unprofitable, it's beat its earnings expectations, but because it wasn't beating the same time last year, people are taking profit. They've doubled their money, they're taking profit. Zoom, we saw it go to the moon, and suddenly people trimming their position, taking profit. You're seeing it everywhere. What you're getting is you're getting new investors going in after earnings, and the old investors coming out, and then it drops and the old investors jump back in. Seeing it with Tesla and Apple today. I said yesterday how what's happened is the news has come out about the 1% dilution. So you've had a 1% drop, then you've had a 4% drop where you've had some people who didn't understand it, and then you've had people seeing it drop a couple of percent, and then the people who got in just to time it and get out before people started selling so they could make a quick profit on the split, they've got out. And then other people have suddenly thought, oh, it's dropping, I'm getting out, who have done the same, and then stop losses have started getting hit, and then all of a sudden it's gone down to 414, you know. But that's a good buying opportunity for some of us. Now, I've been asked before what kind of trader I am. I don't like to be set to one style. This is why I tried to say in some of my videos before, I don't think it's right that I do these videos anymore, but then I was asked by subscribers to please start putting them up again. But the thing is, I trade how I see the market. At the moment, big tech is overvalued. I've said that for the past couple of months, and I said there will be a pullback in big tech. These have been opportunities like Fastly, like now with CrowdStrike, you know, with Tesla, you know, and Amazon during dips, and Google and Facebook. And this is why I don't like analyst reports. When analysts said in March, April time to stay away from Google and Facebook, I went through them and I picked up Facebook about 166, 170, and Google at 9.99. I wish I'd picked up more, especially today, but the thing is, the analysts aren't always right, and half of the time they're trying to short the stock themselves. Look at what they did to Neo. When Neo got to $12–14, they said it was only worth $10, just so they could bring down the stock. As soon as the stock came down, they bought up a load of it. Now, onto the shares I was talking about. Pfizer says its virus vaccine could be ready for October. I said Pfizer is undervalued and would be a good play for the vaccine, and here's the proof. Now remember, just because a stock goes out of the Dow, reports show that sometimes these stocks do better out of the Dow than in the Dow. So selling them just because they've gone out of the Dow isn't always a good thing. Now, Pfizer has gone up from the 30 that I said to get in. It gives a dividend of 4%. I'd wait for a pullback, and there will be a pullback. The next one is Ariana Resources. This is another one like my Barrick Gold, where I got in early, I doubled my money, pulled my money out because I got impatient, and I got in at 2 pence a share. They have had an open pit. They used the open pit to pay off their loan, to pay a maiden dividend, and they set themselves up. And to tell the truth, they're in a good position, and they 4.2 million liabilities, current assets 5 million. Now since this, they've paid off their loans. So since this is on, because this is December, they have a lot of cash on hand, and because this is December, on top of that, they have found a new high value gold stream in Turkey. What they've done is they've gone underneath the open pit to look for gold stream, which they have. They've also gone to the northern edge of the open pit, see if they could find some, and they have, and they've drilled 10 drill points to see if it was a sustainable one, and they've hit a high value one. Now I will put this down so you don't have to see my face, and I will show the video.
Joining us here today from Ariana Resources, we have Kirim Senna. Hello to you, Kirim. How are you?
Good morning, Katie. Very well, thank you. How are you?
Very well, thank you very much. Your latest set of results, Kirim, can you talk us through them? What exactly do they mean?
Right, so this related to drilling that we'd undertaken on the Arzu South vein, which is the most important vein within the Kızıltepe mine project that we own 50% of with Psth Construction. The drilling program was focused primarily on testing down dip continuity of the Arzu South vein. The Arzu South vein we've been mining for the last 3 years or so. We're now at the bottom of the designed open pit, and we want to test for further continuity.
I will see you later. Don't forget to comment in the box below. It really does help with the YouTube algorithm, and also hitting the like button. I'll see you later. Stay safe, stay savvy, stay investing. Goodbye.